The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the magnificent Monday, the August 21st edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time frame, thanks so much for doing so. We're going to try to make today's show as pertinent as we can for this 8 o'clock hour as it will be for the 11 o'clock hour. Of course, if you are listening live, we would love to hear from you. So you can give us a call at 877-927-6648. Now, if you've got a question but you can't call in, you can always send me an email. Send that off to steve@tfnn.com. Now, that's only between 8 and 9 this morning. I'll be gone for the rest of the day. But if you are listening live, send me an email between 8 and 9 at steve@tfnn.com. And inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on magnificent Monday. Of course, welcome to Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got U.S. equity futures trading to the upside. Dow equity futures up, where are they at? They're up 126 points. The ES Mini is up 23 points, trading out at 44.05. NASDAQ 100 futures up 0.7%, 104 points. 14,848 is the print there. And the Russell's up about 0.4%, about 7 points. You've got gold trading up $6, silver up 44 cents. Platinum is flat, copper's up a penny. Palladium was up $10. Light sweet crude is trading out at 81.53. That's up 1%. 87 cent move there. Natural gas up 7 pennies, trading out at 276. Over in Asia last night, and that's where we're going to start today's show. In a moment, we had mixed markets. You had the Shanghai finish off about 1.25%, 1.8% for the Hang Seng. The Nikkei was up 0.4, about 114 points. Over in Europe this morning, you got both the FTSE and the DAX trading higher. Now, the DAX and the NASDAQ, they correlate to each other pretty well, directionally speaking out here. So when we take a look at those charts, we certainly want to keep an eye on what's going on out there. In fact, let's go ahead and let's switch over to those charts right now. We'll take a look at my white background chart. So really what I'm going to do here is we're going to start off the morning how I start off my morning, which is in taking a look at what's going on internationally. So very first thing that I do is get a feel really for this set of charts right here. What took place overnight in Asia, what's going on in Europe, what's happening inside the U.S., what's going on inside the U.S. dollar index. So it gives us a pretty good snapshot of what's going on around the world. So if we take a look at the Shanghai, what we can see about the Shanghai index, it had a TD9 count bottom. That TD9 count bottom formed back here the trading day of August the 17th. It sliced right through that. I don't have any other bottoming signal. I've got an A to B equals CD to the downside pattern. That should take price down to about the 3157-ish type area. If we take a look at the Hang Seng has an A to B equals CD pattern. I don't have that drawn in here. It's already exceeded the 1-to-1 level. So the next bullish reversal candle would confirm a buy the D point pattern. Short of that, price will likely head lower. In the case of the Nikkei, it's likely price target. This got an A to B equals CD to the downside. If it were to generate a bullish reversal candle, it would form a Gartley buy pattern. Short of that, price right now is testing a prior swing point. That's back from June the 8th. If we get a close below that, that, by the way, is at 31,420. If we get a close below that, we're headed to 30,785. So the Nikkei just needs a bullish reversal candle, as does the Hang Seng. The Shanghai should continue to move lower. The FTSE, you can see its A to B equals CD pattern. It's exceeded the 1-to-1. It's probably about 1 to 1.272 right now. If this did generate a bullish reversal candle at day's end, price is all the way back to its breakout level. That's at 72.8252. And if we get a bullish reversal candle, right now it's a bullish piercing candle. I do not know what it will be like when its market closes, which I think is 11:30. But whatever time it closes out there, if it's a bullish reversal candle, the FTSE will generate a Gartley buy, and that would suggest a rally up to the 74.20 level. The DAX has formed a to B equals CD to the downside pattern. And but that doesn't mean that price can't rally, and price could rally all the way up to its oscillator and change line at 15,813 out here. So we're trading above yesterday's high. It's closed the gap that was formed, not yesterday, but Friday's high. It's closed the gap that formed there. And as long as price closes, I would say above 15,664.30 today, we're at 15,688. Price should go target that oscillator and change line. That would suggest further rally here, further rally inside of the NASDAQ and NASDAQ 100. Let's not spend any time on the ES Mini or the NQ charts. We're going to move over into the U.S. dollar index. And instead of just looking at this chart here, we're going to go take a look at the actual components that make up the U.S. dollar index. That way you and I get a better feel for what's going on. So that's how I start the day. Now, this is not where I go next, which is to the commodities, but we are going to go take a look at the commodities. Instead, what we're going to do is we're going to take a look at the U.S. dollar index chart. So here, you've got the 6 components that make up 100% of the weighting inside the U.S. dollar index. It's the euro, 57.6%, the yen, 13.6, 11.9 for the pound, the Canadian loonie, 9%, and the Swiss krona, the Swiss franc and the Swedish krona, 4% and 3.6%. So let's start off with the euro out there. You can see the A to B equals CD pattern to the downside. If we get a bullish reversal candle, which is pretty easy to do today because Friday was a doji candle, then what this would do is generate a Gartley buy pattern. So what price should then do is make its move up to its oscillator and change line. That's currently printed at 1.0935. If price closes above that, it should extend its rally. If the euro does that, if the euro moves higher here, that would then weaken. That would get strengthened against the U.S. dollar, and the U.S. dollar index would presumably move lower out there. If we take a look at the Japanese yen, now the yen has an A to B equals CD pattern to the upside. What it does not have is a bearish reversal candle, and right now price is testing its oscillator and change line. And as long as that level holds, that level is 145.28, price is likely to continue to move higher. Now, as this moves higher, it is weakening, and so the U.S. dollar index would be strengthened a bit. So you've got 13% of the weight of the U.S. dollar index says I might want to strengthen. 57% is saying I likely want to weaken. That was the euro. Now, if we take a look at the 12% weighting, that's the Great British Pound. It still maintains its buy the D point pattern, and it does that as long as price continues to close above 1.2621. Now, what price is doing right now, it's taking on its oscillator and change line, which is green. If price can close above that, it will be back to its bullish ways out there. So that is resistance. It has held for the last 3 trading sessions, but it closed today above 1.27549, not to be exact or anything, but a close above that level is going to suggest a further rally. If that does that, then the U.S. dollar index would weaken against the pound out there. So you've got 2 that are suggesting weakening, 1 likely identifying strength out there. And that's all that I don't want to belabor the currency pairs too much, but that's really all that we need to know. So keep your eye on both the euro and the pound out there, as they could be signaling a further move higher, and that would be for the U.S. dollar index move lower. And for the U.S. dollar index, that move lower should take us to its oscillator and change line. That's at 102.81. Steve Rhodes with TFNN. When we get back from this break, we'll take a look at the commodities, soft commodities, and then we'll move into natural gas out there for Ron R. inside the Tiger's Den. We'll be right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're recording the show. It's 8:18 in the morning right now. You got U.S. equity futures trading to the upside. Dow futures up 113. NASDAQ about 100. The ES Mini's up 21. The Russell's up 5. We're taking a look at the some soft commodities out here. We'll move over into natural gas. So we've got wheat. It's the upper left-hand panel chart out there. We can see that right now the rally has run into resistance at that red oscillator and change line. That red oscillator and change line tells us that we have a price oscillator that's below zero and falling. Those are bearish conditions. We can also see there's a new profile that's attempting to form overhead that tells us about overhead supply. Now, not that price can't get up there, but that too is a bearish message. So this is suggesting to you and I that price is going to go retarget the lows from the last couple of days. If we take a look at soybeans, right now soybeans are trading above the top of their daily profile. To close above 1361.80. These are the November beans we're taking a look at. Price should go target its TD9 count top, Rhodes Momentum Indicator topping signal that you see up there. If we take a look at December corn, right now it is consolidating with inside its daily profile. Do not have any kind of a bottoming pattern, but it closed above 504.10. Today would signal a further move higher. Coffee does have a bottoming pattern. It formed a TD9 count bottom last Thursday. And right now, price is consolidating with inside its profile. It closed above its red oscillator and change line where it's printing right now. Would suggest a target of 155.08. If price can close above 155.08, coffee has formed its next bottom, and it should continue to move higher with 164.30 being the next upside price target area. If we take a look at sugar, sugar's just trading sideways, not much more for me to report there. And if we take a look at cocoa, cocoa had a nice TD9 count top. It took price back towards its breakout level. We're now trading above the top of its daily profile. What it really needs to do is close above that green oscillator and change line at 34.85. That'll go up by a point or two. So let's just say a close above 34.90 out there, and cocoa should be on its way back to its recent highs and resume its rally. And it's been on a big run all year long. So that's what's going on. We take a look at the soft commodities. I'm going to close this chart out. I'm actually going to shut the system down, not the entire system, but just one of the data feeds. Now I've got two other data feeds going here. Now we're going to go ahead and pull up the charts here for natural gas. So thanks for giving me the chance to do that. So we'll pull up the natural gas charts out here. We've got a couple of Denners, one Ron R, and the other, who else wanted natural gas? Might have been S&P Dave. Yeah, I think it was S&P Dave. So Dave was interested in Boyle. Doesn't matter whether it's Boyle or UNG. What you want to do is you want to understand what's going on in the underlying instrument. Now, my assumption is it's still the October contract that is making up the majority. I know last week it was both September and October. I believe this should be rolling over into the October contract, and that's what we've got up on our screens here. So we have a buy the D point pattern on the monthly time frame out there. So that's what we've got in natural gas. On a weekly time frame, we've got a TD9 count and Rhodes momentum indicator bottom pattern. Price is consolidating in both the weekly and the monthly time frame within their profile level. So consolidation patterns. In the October contract for natural gas here, and it should, let me just check one thing out, because there is a new profile that's attempting to form. I just want to check on one of my settings on this daily time frame chart up here. So give me one moment. I think I can change that to pick up. Yeah, I may be able to pick up that new profile right here. So give me a moment. There we go. Did it pick it up? It did not. Okay, well, it was a nice experiment. It didn't work. It didn't pick it up because it's now vanished. So, all right, so here's what we know about natural gas right now. And you're looking for an entry point. And here's the issue with regard to natural gas. First, we have traded, or it has traded below the bottom of its October contract for three consecutive sessions. Today would be the fourth consecutive session out there. When you just have two consecutive sessions below the bottom of a profile, especially if it is bullish in structure, which this one was and is, then a counter trend move. Here's where it gets a little bit difficult for you guys looking for an entry point into natural gas. If you can answer this question, if you don't believe that it's a counter trend move, and price will prove that to you. If it is a counter trend move, the rally ends at 283. It really ends between 277 and 283, but 283 would be the final line of demarcation. I'm not talking about trade above it. I'm talking about close above it. And so is now an entry point? I would have to say no. More likely the entry point would be towards the bottom of the weekly profile at about 262. Now, do I have any signal to suggest that that's going to unfold? Nothing that I see at this moment. But with regard to an entry point, whether it's in Boyle or whether it's in UNG, or you're just trying to buy the natural gas futures contract out here, I think you've got to be very cautious right now. And if you take a look at that weekly time frame chart, what you can see here is we've been consolidating sideways since April. So we've gone on for a pretty good long time. There's nothing inside the charts that are suggesting to you or I that this wants to do anything other than consolidate. So if that is the case, and you're looking for entry points, you really want to make those entry points, if you can time it, with those ETFs being open as prices pulling back. So you're below profile levels here on the daily time frame. You don't have a message to enter into a position here. It's really the weekly chart, meaning there's no bottoming pattern or anything along those lines out here. So really get back to those profile levels. Now, the weekly chart there, 2.621 is the area that you should be looking at. Now, on an intraday basis, what do we have out here? You know, you had on a 2-hour basis, on a 60-minute time frame, you had some nice Rhodes momentum and TD9 count bottom patterns that were out there. But what else do I see? I don't see much of anything else out here as we speak right now. So that's the best that I can provide you, Ron, with regard to natural gas. I hope that information assisted you. The same for you, S&P Dave. So I'm going to close this chart out. I'm going to go to our next request out here. I'm just going to take care of a couple of these requests, and then we'll get into, as we get past that next break, we'll come and we'll take a look at the equity futures markets themselves and what to perhaps anticipate. But first, what we're going to do is we're going to put up, I'm going to open up these charts. I'm going to try to open up these charts here. We're going to go take a look at MUFG, and that is for one of our Denners. That is for, that's not it. That is for 777 Jack out there. So give me a moment here. MUFG. Sorry. Oh, wrong screen. There we go. So now we'll get that chart. Now this is Mitsubishi Financial Group out here. And so we're going to see a lot of gaps. And those gaps are just currency related. And Jack is looking for a buy point. So the only buy point that I would have out here, Jack, is price is testing and it has held the bottom of its daily profile. I don't have any other kind of pattern that I can see out here, but it has held support. And that support level being $7.42 out there. On a weekly time frame. Weekly time frame, there is no top that is in place, but there is a set of profiles, and price could be targeting the bottom. So that's at 725. So with price below that green oscillator and change on a weekly time frame, even though support is held on the daily time frame, price could be pulling back to test support on the weekly. That's at 725. And on the monthly time frame, it's too early in the month to call. Let's just see if this A to B equals CD pattern here has at least completed the 1-to-1 move. I don't know that, but we're going to find out here momentarily. We're just going to move that over. Basically, that's about right about there. Is about right. So yeah, it's completed the 1-to-1 move. Now it's too early in the month here to determine whether or not we're going to end up with a bearish reversal candle. That's what you've got right now. So this is suggesting lower price 687. So no pattern in place out here. I'm going to suggest, at least at this stage of the game, that you be patient on this. And Jack, you're looking for an entry point. Let's look for some type of bottoming signal on the daily time frame as price approaches that 725 area. That's Mitsubishi Financial Group. Steve Rhodes with TFNN. Right.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
welcome back, folks. 8:30 in the morning. If you're listening in, it's 11:30. Thanks so much for doing that. We're going to take a look at INMD at the moment. Then we'll go move into the equity futures to prepare you for the day, let you know what the message of the markets is, at least as of 8:30 in the morning, and so you can do some planning. But right now, we're taking a look at INMD. This is for S&P Dave inside the Tiger's Den. And right now, what we can see about this instrument is on Friday, it completed really it was on Thursday of last week, it completed a TD9 count bottom. Price tested that on Friday, and that held. What you should see here is price should make its way up to its oscillator and change line. That's currently printing at 41.01. Now, price did close below the center of its bearish structured weekly profile. And that profile formed with price above that area. This now is suggesting that price may want to pull back to 34.96. The monthly time frame, I don't really have a great signal here either way, so we'll just focus in on the daily and the weekly. So on a daily time frame, well, let's go to a 30-minute chart here first. Let me pull up the intraday for in mode, and in mode formed a TD9 count bottom as well last week. It did that at 10 o'clock in the morning. That was on August the 18th. We can see that the rally ran into resistance at its TD9 count breakdown area. So INMD. What you and I now know is if we see this close above on a 30-minute basis, 37.79. I don't know if there's any intraday trading on this. Let me see here right now. INMD. 37.79, 37.90 was the last trade that fired off. It was 5 shares. But watch 37.79. If price closes above that, then that is signaling to you and I that it should rally further. That rally further would be 40.75. But what it would also be signaling to you and I is that this daily TD9 count bottom is more likely to hold than not, with that rally getting up to the 41.01 level. Now, this is a monthly time frame of consecutive moves higher and lower. Let me just switch this over here to the daily time frame. Let's see where we're at on a daily basis for consecutive moves. So this had 3 consecutive moves lower, which has typically led to at least a one-day rally out here. I've taken a look at some other patterns out here. Friday was in essence that rally. Will this extend itself? And I think the answer is going to be based upon that 30-minute profile level that we took a look at out there. So you should get a rally. It should get us up towards that 41.01 level. Remember, this thing has been kind of in a pretty bearish mood out there. So if you can get more than 2 consecutive days higher, then S&P Dave, that would be signaling that rally up to that 41.01. So I hope that helps you out. And thanks much for taking the time to put in a request. Now, let's go tackle the equity futures. So let me show you what's going on here. We're going to change our screens. We're going to go to the black background screen for a moment. We're going to take a look at all 4 of the daily equity future contracts. So here what you're going to notice is you're going to see, or you should see, new profiles that are attempting to form for each of the daily equity future contracts. So this is really important. Now, when I say they're trying to form, the reason I say they're trying to form is we're using Stevie's advanced Doppler tool out here. And that advanced Doppler tool picks up new profiles before they've been cemented. Oftentimes they'll form, sometimes at different levels, sometimes at these levels, sometimes not at all. Well, that was really helpful, Stevie. It is helpful because we now know what the message of the markets is. And right now in 3 of the 4 equity future contract, the message of the market is this should only be a counter trend move. The reason is because the ES, the NQ, and the YM each have new profiles that are attempting to form below price. Now I need to see what today's price activity does out here, and where these profiles, whether they do or do not form. Won't know that till 6 p.m. this evening out here. But right now we use the information that we have. And the information that we have inside the ES Mini, the green dashed line that you're looking at, upper left-hand panel, is the bottom of the weekly profile. That held on Friday. That's an important message. And that message alone suggests that we should rally. And the reason that we should rally, or it suggests that we should rally, is because first, the markets are coming from the extreme oversold condition. To get to the extreme oversold condition, New York Stock Exchange, advanced client oscillator, has to get down below the minus 250 level. Once it gets below minus 150, you are in oversold territory. Well, this got into the extreme oversold territory. That condition needs to work its way off. It can work its way off by generating one of 2 patterns, either price moving lower with the advanced client oscillator, panel number 3, making higher lows out there, or it could just simply be the low of that oscillator came in on Thursday, Friday of last week, and this is just simply going to rally and work off that overbought condition. Now, if the market remains bullish, where price should find resistance or where price should start to turn down is when that oscillator gets up towards that zero threshold level. So now that we've established that the market is in extreme oversold condition, we come back and we take a look at the 4 equity future contracts out here. We see we've got overhead supply. What this also helps us is to identify where we believe price is going to go target. I would say inside the ES Mini right now, where price should rally up to is the 44.47 or 44.67. 44.67 could be or should be a gift out there. Now, if price is going to get up there, this is where it gets a little bit complicated. The NQ's profile, the NQ is a little bit weaker than the ES Mini as we speak right now. Why do you say, Stevie, why do you say that? Because price closed below the bottom of its weekly profile last week. The ES Mini did not, the NQ did. So the first level of resistance inside the NQ is up at 14,942, and then the next level is at 15,109. But again, those profiles are subject to change. Inside the Dow equity future contract, the Dow first resistance level is 34,860. And if price can get above that, we'll have to go take a look at this oscillator and change line to see where that's printed at that stage. But right now, the first level of resistance inside the Dow equity future contract is going to be inside the 34,860 to 34,823 is what I should say, to 34,860. That is both the top of the weekly profile and the bottom of the new daily profile that is attempting to form. Now, the only one of the 4 equity future contracts that's not delivering that message of overhead supply is coming from the Russell 2000. The Russell 2000 on its move lower found support at the bottom of its weekly profile. That is important. It is also attempting to form a new profile with price trading within inside it. Now, it is bearish in structure. And bearish in structure says the sellers inside of the Russell 2000 reside between 1875 and 1888. If price can close above 1888, and this new profile remains in effect, that would be a strong message for the Russell 2000. So that's what those black background charts for the equity future contracts are communicating to us. Let's do a deeper dive. Let's start off with ES Mini. Let's go deep dive into its intraday charts out here. We're going to change screens. We'll be back on the white background charts. You take a look at the 10-minute time frame. Let's just really dive down. Let's get real intraday. 10-minute chart's got a nice TD9 count top out there. Price ran right into that, tried to rally into that this morning. It failed. You can see we're trading right now below its bottom of its 10-minute profile at 4,400. 43.9650 is the level to be watching there. Why? That's its breakout level. And if price on a 10-minute basis closes below that, you should expect or anticipate that price will pull back further. If price finds support there, it's going to price should try to target its TD9 count top. It would negate that pattern with a close above 44.0650. Inside of the 15-minute time frame chart, it also had a TD9 count top. It's now added a Rhodes Momentum Indicator top, and it's trading with inside its new profile. It's actually trading below the bottom of the new profile at 44.01. If 43.9650 gives way, then we're looking at, as I mentioned, I did mention 43.7850. That would be the breakout level on a 15-minute time frame. If we look at the 30-minute time frame, the 30-minute shows a Rhodes Momentum Indicator top. That was a bearish engulfing candle that confirmed that as we came into the 8:30 session. Right now, price is trading with inside its profile levels. So it's battlegrounds, right where it's at right now. That's at 43.98. Below that would be 43.89, 98 and 89. You got to like that. And below that, 43.7850. Steve Rhodes with TFNN. Be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we spent that last segment taking a look at the ES-Mini. That was one of the things that we were doing out here. And what I've got up on my screen right now, so we established that the 30-minute chart had formed a Rhodes Momentum Indicator top out there. And we saw that in the 15 and the 10-minute charts are as well. What we're looking at here is the 30-minute TAS market breadth. Now, what this does, this provides you and I with a competitive advantage out there, because what you and I know right now is that there are 259 instruments with price trading above resistance on a 30-minute basis. That's the top of their 30-minute profile. There's 74 instruments trading below profile, 162 in between. So this is a very leaning, bullish a chart pattern that is out here. So that tells us, so that's what's going on inside the ES-Mini for its 30-minute. Let's take a look at the NASDAQ 100 and get a sense for what it's communicating to us. And so this is where we get liar's poker. Who's bluffing out here with regard to price moving lower? We take a look at the NQ. It's also very bullish. You've got 50 trading above, so half of the instruments are trading above their 30-minute profile, 18 below. So 18% in essence below, 35 with inside profiles out there. Again, on a 30-minute basis, both the ES and NQ are leaning bullish out there. And that really is important to us. So when we come back now and take a look at the ES mini charts, I'm going to flip back to those white background charts out here. We're going to take a look at, we're going to focus in on the third. Oh, you know what I'm going to do before I do that? Let's pull over the larger time frames. So let's do that. Let's take a look at the daily, 240 weekly, and the 60-minute time frame. So did I pull over the wrong thing? I did. Hello, Stevie. Wake up. Now let's pull over the correct actual template out here. And now we've got the other 4 time frames. Upper right for the S&P is bullish, 60-minute. When I say bullish, there's 201 instruments above, 100 below, 200 with price trading with inside profile. So again, leaning bullish. Now in the 240-minute time frame, and if you're going to see changes in trends, the signals will start flipping. The bullishness of the TAS market profiles will start flipping on the shorter term time frame, such as the 30 and 60 before it does on the 240. Here on the 240, you got 72 above, 179 below. So we still got choppy market conditions, but the intraday chart, the intra-time periods for the 30 and the 60 minute are bullish for the S&P. And now let's take a look at the NQ. And the NASDAQ 100, it's the same scenario. And that says we've got 57 above, 15 below, and 30 within. So the NASDAQ, the NQ, is very bullish out here when we take a look at its 30 and its 60 minute time frame. So now let's go focus in on those charts. Well, we'll take a look at all of them. But on a 30-minute basis, we're looking at the ES mini out here. I would say, and so this is a bearish structured profile. I'll just simply expand out the chart out here. And we take a look at it. Price has just simply been trading with inside this profile ever since it had formed out here. And we have both buyers and sellers that are sitting at the center of that profile. So that is a first level of support, 43.98. But the bigger gift would be if price could pull back to either 43.89 or 43.78 with its market breadth remaining bullish, remaining positive as it does right now. Will price get down there? What we don't have out here is some kind of bottoming signal on the 15 or the 10-minute chart out there. I would say a good entry point, if one was looking to go long, would be 43.96 out there. We should expect a further rally today, especially with those market breadth data, and know that we're coming from the extreme overbought condition inside of the markets. Now, if a rally is going to end and it's really just a counter trend move, I know we were taking a look at this daily time frame and its new set of profiles that is out there. But what we really can also do, and is another price area for you to be paying attention to. So we're assuming it's 8:46 in the morning. You're listening, it's 11:46, and the rally is continuing here. Where is it that the rally could run out of steam? And for that, we can go back, we can take a look at the apogee pivot point that formed last week. So a key level to watch, should the market continue to rally, which it should, would be the 44.52 level. And inside the NQ would be at the 15.098.50 area. If price closes above those levels out there, as it is like we've got light sweet crude is trading above its apogee pivot point, it tells us that it wants to continue to rally, at least on the intraday time period. I'd watch those two levels, the ES and the NQ, or at least you should have them on your pad of paper, 44.52 and 15.098 out there. Now let's switch back and let's go over and take a look at the white background charts and look at the NQ. So let's dive down into the NQ charts, see what kind of signal information we can get there. So it's going to take a moment here for these charts to populate. But once they do, they're going to give us the information that we need. And we know that on a 30-minute basis and on a 60-minute time frame, we are TAS market breadth bullish, meaning there's more instruments trading above resistance than trading below profile. Now, on a 30-minute basis for the NQ, it's also trading with inside a profile level. And here it's pretty much even, Steven. We can see that prices found support at its green oscillator and change line. So this could be the extent of the move lower. If we look at a 10-minute chart, we can see that price is sitting down at profile support out there. So that can support that. I don't have a topping pattern on the 30-minute time frame chart. It's got a Rhodes momentum indicator signal, but no bearish reversal candle as we speak, at least not just yet. We still have another 13 minutes left in the trading session, so we don't want to make a call too early out here. If this area, this oscillator and change line, let's just call it 14.825. If this level fails and price heads lower, let's call it 14.824. That's the bottom of that 15-minute profile. We should expect a further move lower, and that lower area would be 14.803. And at 14.803, that would likely be the buy the dip area on an intraday move out here. As I look at the other time frame charts, just looking for any other kind of topping area or anything, and I don't see anything. On a 5-hour time frame chart, you've got a confirmed TD9 count bottom. Price is trading above the top of its profile. This is suggesting to you and I that price wants to make a move to 15.018. Remember, 15.098 is going to be a real key level of resistance and could or should be the area where the NQ would be shorted from. Now, we don't. That's the call or anticipated call as we speak right now. We'd want to see what's going on pattern-wise. Should that unfold. On a 240-minute basis, you're trading above profile levels. The same thing on the 2-hour basis out here. That's actually showing an A. Well, doesn't really show an A to B equals CD. Not enough for retracement there. So you're above resistance level. So it does look like as of 8:49 in the morning, based upon the chart patterns that you and I are taking a look at, based upon market breadth, that these markets want to rally further. Let's take a quick peek here at, let's go look at Goldilocks. Let's take a look at the gold contract, see what it is doing out here. We've got a bit of a rally. You and I, we took a look at the U.S. dollar index. It looked like that wanted to move lower. If you're just joining us right now, it looks like we might get a Gartley buy pattern inside the euro. That should take us higher. The yen is the only one that's not participating, but it looks like the Great British Pound wants to also strengthen against the U.S. dollar index. If we take a look at Goldilocks out here on a daily basis, we do not have a bottoming pattern. We do have a new profile that is attempting to form. And that new profile that's attempting to form inside of gold has support at the bottom of the profile, I should say, is at 1918.60. The center is at 1928.60. And the top of that profile is at 1953.50. So you got a bit of a consolidation there. The 5-hour time frame chart for Goldilocks shows a Rhodes Momentum Indicator bottom, as does the 4-hour chart, as does the 2-hour chart, as does the 60-minute time frame chart out there. If I take a look at a 30-minute chart, we probably got a bottom back here too. Yeah, it was a TD9 count bottom that held. So I don't see any signal here that the rally higher in gold is likely to end. Maybe that transpires when we get to 1934.10. And 1934.10 is the current daily oscillator unchanged line. Steve Rhodes with TFNN. We'll be right back to finish out the show.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Right now we got it's 8:54 in the morning. You got U.S. equity futures pointing higher as we speak. You've got the Dow futures up 53 right now. Nasdaq up 79. S&P futures up 14. The Russell's up 2 points. Gold's up 9. Silver's up 56 cents. Copper's up 2 pennies. U.S. dollar index trading back about 126 pips right now, trading out at 103.15. The chart we're looking at here is the DAX. The DAX has given up a little bit of its gain since we came on the air at 8 o'clock this morning. The DAX and the NASDAQ are fairly well correlated, I should say. If you take a look at the 30-minute time frame chart, for the DAX, you see a nice TD9 count top. You see how this tool works for all time frames, all instruments. Price right now likely pulling back to its oscillator and change line. That's at the 15,643 level. That's an area that should hold, and then we should start to see the NASDAQ rally. If that level fails, well, it could be making its way back to the 15,487 area. Now, what I'll do here is I'm going to change screens for you. And what we'll see momentarily, I'll switch over to the correlation tool. And here's the correlation. The top portion is the DAX. Disregard profile levels up there. Right below that is the NQ. And below that is a 3-day correlation. When the bars are above zero, it tells you about a directional correlation. Below zero. So it looks to me like, 85% of the time the DAX and the NASDAQ have that directional correlation. And that was, again, one of the reasons to pay attention to that. If we just take a look at, generally speaking, with regard to Stevie's 9-panel market update chart and give you an update here. One of the things that we can see here is that the ES Mini, again, on Friday, it held the bottom of that weekly profile level. You see that new profile on a daily basis that's trying to form 44.47 should be resistance. Choppy markets, especially with that spot volatility, still well above its 50-day exponential moving average. And the NQ, also new profile attempting to form 14,942 is an area of resistance. Folks, stay tuned for all the great programming. Tommy O'Brien is up next, and I'll be back with you tomorrow at the normal programming time. Have a magnificent Monday. Thanks for joining me. Be safe out there.